Hey, welcome back to the channel, Fully Invested Fi. Today I'll be going over portfolio updates from week 36 or month 8 since I started investing 100% of my paycheck at the end of May 2025 and fully living out of my Robinhood brokerage account. I'll go over my month's performance, this past week's performance, dividends received, look at also a deep dive into their yield on cost, any portfolio news, and then finally end with the usual finance video of the week. As always, I share all my numbers with radical transparency, and you can see my full portfolio and performance with no paywall. Everything is linked in the description below if you want to take a look as you're following along the video. As usual, before we get started, this video is for entertainment and education purposes only. I'm not a financial advisor, and nothing here should be taken as financial, investment, or tax advice. I'm simply sharing my personal investing journey and documenting my own results. Investing always carries risk, especially when using margin, and you can potentially lose money. So don't copy what I'm investing in blindly without understanding the risks and doing your own due diligence. No returns are guaranteed. So before we get fully started, as usual, just want to show the fully invested flow chart here. And just as a refresher for anyone that's new to the channel, I invest 100% of my income, so at least 10.8K every month into growth and high yield ETFs. I've stopped using a traditional bank account to live entirely out of my brokerage account. I use cheap margin of 4.5% to bridge the gap between my bills and my dividends. And the goal is to never sell a share, forever compound both my growth and high yield assets, and have my monthly dividends eventually exceed my monthly expenses. For an in-depth breakdown of this chart, check out the link at the top right. And let's just get started here. So if we pop over to Robinhood, we can kind of see the performance over the last week. On Friday, ended the day slightly green thanks to the dividends that came in. So it was up $250 or 0.16%. On the week though, pretty red week overall. Yeah, there was a pretty big dip in the middle of the week here and just kind of kept dipping. That's where you can see I was down $2,661 or 1.68%. On the month, almost flat, just slightly under. So down 0.34% or down $526. On the 3 months, I'm still kind of recovering from like the dip that happened back in November and October of last year. So slowly creeping my way out of there. So down $13,065 or 7.75%. Year to date, just pretty much flat. I was for the last few weeks, I was outperforming the S&P by quite a bit. But these dips that have happened over the last couple of weeks have definitely kind of cut into that a lot. So just breaking even now at 0.05% or $71.88. And then if we go over the all-time performance, because I haven't quite hit a year here. And so I'm up 5.33% or $7,875 since I transferred everything into Robinhood back in July. So that's how stuff's looking. You can kind of see my full thing here. So this is my full live portfolio, right? Nothing's hidden. You can kind of see all the positions there. This is kind of the margin stuff. We'll dive into that when we get to my spreadsheet, actually, because I get a better, more informed view of all this. We pop over to the investment sheet here. So we can kind of go over the top line numbers here. I'm just going to basically read out the final line of everything, right? So basically the total profit, including realized gains, including margin, dividends, all that jazz. So I'll basically show both versions, ones with total returns and no total returns included, essentially. So the gross value is $310,687. And so yeah, firmly above the $300,000 mark, big milestone for the portfolio. Margin used, I'm sitting at $154,427. So realized gains, this hasn't changed anything because I haven't really sold too much. Actually, I sold YieldY to swap to ULTY. So this kind of came down a little bit with the little loss I realized there, which you can kind of see here from the YieldY sale, right? And my net value is $156,259. So if you go down the chain, you can kind of basically see how you get to this number here, right? And if we scroll back to like here, so there's two columns here, right? So I have total returns, which includes dividends that received, and then also just the normal unrealized gains that you typically see on a brokerage account. So I like tracking both because really, like, especially for the high yield stuff, you really need to kind of take into account total return and kind of seeing exactly how much you're getting on top from the capital gains plus any dividends received. So really total profit at the end of the day is $48,465 for total returns. So that's roughly 31.02% in total profit for the whole portfolio. So this includes margin. So that's why this is higher than this number here. And then if I go on the unrealized side, I'm actually down $17,835. or minus 11.41%. So if you include margin, right? Obviously this is quite a bit in the red, specifically because of the high yield stuff here. But if you switch over to this column, you kind of see the two realities of it, right? So the total return column really shows everything with dividends reinvested and how much that kind of keeps you in the green. So there's only a couple here positions that I'm in the red. So actually with the dips that have happened over the last month, I'll just basically go over those, right? So Hood has dipped into the red here, and that's why I invested into it this week with the full Paycheck investing. Costco has dipped back in the red. I was in the red for the longest time, and there was a big upswing at the beginning of the year, but now this is kind of slightly dipped. Take-Two had a big dip because of the AI stuff that dropped from Google last week, which was really overblown, and I think investors just don't really understand how game development works. So there was like a 10% drop of this, and that's why I bought the dip as well. WPAY is has kept dipping, so I think this was like closer to like 11% the other week, so this has dipped further down even with dividends received, so keeping an eye on that. ULTY is down as well, minus 5.86%. This number has reduced a bit because of the HUI dividends that I've kind of added on top of this, essentially, since I condensed those. But yeah, that's where it's sitting. And then MSTY, of course, the big the big flopper in the portfolio. So just holding on to it because it's like such a small amount at this point in the grand scheme of things. And I'll just kind of let it play out, whether it comes back or not. But MSTY actually had like a bit of a recovery this year, and then just kind of totally flopped last week with Bitcoin taking a nosedive, and it's actually still taking a nosedive today. Coin actually dropped under 78K, or yeah, 78K right now. So it's dropped quite a bit. Yeah, big drop here from basically the end of the week and even through the weekend here. So I basically bought when it was like 82 here and dropped some more today. So can't time things perfectly, right? That's the top line numbers there. If we go down to like how that all breaks down between my growth and high yield income stuff. So on the growth side of things, I have $171,343 invested. So that's basically all these positions right here in white between my single stocks and my ETFs that are anchoring the portfolio. On the high yield income side, I have $139,343. So everything in gray here. So yeah, mix of like fund of funds, some single stocks, some Bitcoin exposure, of course. So that's what makes up the total of the 310K essentially. Roughly 55% in growth and just a little under 45% for high yield income, right? If we pop over to the margin health here, we can kind of really see where the portfolio's sitting at. So yesterday, interestingly enough, like right after I invested my full Paycheck, things kept dipping and I actually dipped under 50% temporarily, given just the bad market on Friday. But it kind of recovered strongly towards the end and actually kind of got back to above 50%, which is good. But keeping an eye on this, this is a key metric here that like, if I ever dip under 50% at like 49%, 48% or whatnot, what might happen is that the paycheck that comes up the following week or in 2 weeks or whatnot, I might actually just deposit that to cash and margin and not buy anything, just so I can kind of bring the equity back up and pay down the margin a bit, right? So you can kind of imagine that like, say I just pay down, like I put this to like say 149,000, right? So that would give me a 2% equity bump. So yeah, you can, that's what depositing a full paycheck would potentially have. And that's what's kind of nice to kind of have this real-time view of stuff. You can kind of like do scenarios of it. So say like I pay down my margin to 125,000 or whatnot, right? You can kind of see how my equity would instantly jump to 60% or whatnot, right? So great to have all these values to keep in mind. But you can kind of see my gross portfolio value. If you minus out the margin, that gives you my net, which is $156,259, right? So you see the relationship between all this. And then if you take this gross portfolio value and apply the blended margin maintenance of the portfolio, right? So basically all these numbers that I can kind of grab from Robinhood, right? Most of my things are 25%, but I have some outliers here. MSTY, YPAY, GOW, which are leverage. So those are 30%. But if you add all those up, it's essentially taking that number, timesing it with your market value of that position, and it gives you the minimum that you need to maintain, right? And then you add all those up, and that's your final number there. So that's the number here. And then basically this buffer is basically the buffer between my net portfolio value and this, right? So you want to keep this as large as you can to basically keep you away, because this is what keeps you away from the margin call, right? And I kind of track this percentage across two different values, right? So this is the value you typically see on Robinhood for the 49.40%, which I'm not the hugest fan of, just because it's kind of like misleading a little bit, just because this goes off the net portfolio value. But what's important is to keep in mind this gross portfolio value margin buffer, just because like really this is the money that's in the market and that's in play, right? So if this money goes down 24.84%, so that's the buffer, That's the equivalent of $77,187 or 49.40%. So this drop of this portfolio value, right, is basically the equivalent of this drop for this portfolio value. So it's important to keep in mind because like that's the amplification and the nature of margin, right? So that's why I highlight this a hot green, just because like this value is a lot more important to me because this is how much I know this portfolio can drop before it triggers a margin call. So, and then here my buying power is sitting at $64,106. So yeah, you see that I'm kind of keeping this pretty high overall. So this is basically taking the margin total, minusing out your margin used, and then this is the difference. And then if you half that, that's basically your cash available for withdrawal. So this is like a rough estimate. If you want to get your true number, it's basically like you have to minus out any interest that you're owing month to date in Robinhood or in your brokerage. And that's your cash that's fully withdrawable, right? So technically I could take out 32,000 for my portfolio if I really, really needed to, right? But as I said, I want to keep a good buffer. So I'm keeping these healthy, keeping the margin buffer healthy, right? So keeping a nice eye on that. It's important to track all that if you're in margin. Then as far as monthly dividends, I'm estimating $4,590. So definitely a big drop from what I had in previous months, really, just because, yeah, there's been that dip that happened in October, November, right? So a lot of dividends came down along with that, given that like the percentages are based on the price that what they're targeting. For example, like ULTY, right? If they target 70%, they try to target 70% no matter the price, right? So yeah, so if the price is like, I don't know, what's ULTY at right now? $35, right? If it was like my cost basis was at $52, and 70% of that is a certain dividend, but 70% of 35 is obviously a lot less, right? So you can kind of see that, especially a lot of the ultra yielders like ULTY, WPAY and whatnot that have kind of eroded and that are kind of red in total return here. That's kind of what happened to them. A lot of those are dropped, but so that's why this year I'm kind of like focusing a lot more on like TDAQ, QQQI, XPAY as anchors, just to have like a more solid base as far as like the monthly dividends, right? That's how it's looking. And then, so this $4,590, that's the equivalent of a 39.53% a yield or distribution on the portfolio, right? So this is if you calculate this off only the high yield income assets that are invested in it, right? But if you go off the full portfolio, it's actually 18.50%. I like seeing all my numbers, so I kind of track a lot of them. So they're kind of all over the place, right? That's it for portfolio top line numbers, margin health. We pop over to Snowball. So you'll kind of see similar-ish numbers, right? I'm not going to go into all of them, but yeah, you can kind of see like how I kind of divvy up my categories a bit more here. I recently updated the high yield categories into 3 instead of just 2 big buckets, just because I wanted to really isolate the ultra yielders. So anything that's like above 40% yield, really, right? So YMAX, WPAY, ULTY. So YMAX is sitting somewhere at like, where is it right now? Yeah, roughly a 51% yield, WPAY at 49%, and ULTY at 71%. Because their yields are so high, that's why they've been having trouble kind of keeping up in total returns, and then also just with the hits from the market dips in the last little while. So this is the thing that's like the only thing that's in the red compared to everything else with total returns. So good to kind of keep that in mind if you are going to be investing in stuff like that. But I think like these, I know people hate on these funds a lot, but like for me, they play a specific role. Like I want that ultra high yield. And then I like the strategies that are backing them specifically, right? ULTY uses a thing where they harvest yield from high IV names. WPAY uses swaps and leverage. YMAX is just basically all of YMAX's stuff combined. So just kind of diversity through fund of funds, right? So that's that for the ultra yielders. So my single stocks, so that's NVDY, MSTY, GOW. GOW is kind of like my catch-all fund for any of my YouTube and indirect earnings and stuff like that. So YouTube earnings, Snowball referral money, Patreon, all that all goes into here. So have $1,979 invested in that so far. So that's my earnings so far from that, which is great. And BTCI, which I invested in more this week. Obviously, that's taken a tumble with Bitcoin kind of drawing down, but yeah, happy to draw down and kind of keep my Bitcoin exposure like fairly tangible. Like my goal with my Bitcoin exposure is generally to kind of keep it 5%. So I'm a little under that, so I can kind of keep adding a little bit more. But yeah, I don't want to go too crazy exposed into Bitcoin overall. And yeah, I have my little gold hedge here, which is kind of doing good. And obviously my growth and div growth anchor here. So VU, SPMO, SCHD, QQQM. I might eventually maybe add VGT to this in the mix eventually, just to have a pure play on technology, because some of these have like a lot of other stuff. But TBD, and I'll talk about a little bit about that later in the video. and growth single stocks. So yeah, Take Two, which is slightly in the red, like I mentioned, Reddit, Microsoft, Meta, Hood, Google, Cost, Apple. So yeah, you kind of see similar stuff that I was showing from the sheet there. You can see the full breakdown there. If we pop over to the growth side of things, so you can kind of see how I'm doing against the S&P, right? And actually, I'm not sure if, let's just make sure to do a final update here. See if there's anything that it picks up. Cool. Yeah. So picked up a couple of things to make sure that everything is included. Let's compare to the S&P and how I've been doing, right? So on the last 7 days, so just trailing it, like I'm down 1% and the S&P is 0.65%, 67. On the last month, I'm up, just matching it, I'm up 1.85% or $2,836 versus the S&P's 1.82% or 2.8K. On 3 months, not doing good since the November dip, right? On 6 months, yeah, that dip has really killed things. Was outperforming for a bit, and then yeah, that just kind of tumbled. And then year to date, just about matching it. So so you can see I was outperforming for a good chunk, like almost doubling the performance. And then yeah, the dips in the last couple of weeks have definitely cratered things a bit. So we'll see how it recovers or not. But I'm up 1.85% or $2,836, and the S&P's up 1.82%. Let's just drop down to my favorite new part of the Snowball, heat map. I always love seeing the heat map for the whole market as a whole, but it's kind of cool to see it all for your own portfolio, right? So year to date and really just month to date, you can kind of see how stuff is going. So if we take a quick scan here, like the big surprise that I didn't expect this year, but I guess kind of makes sense given that there's been a little bit of a rotation out of tech. And it's precisely in years like this that, like, yeah, I'm glad I hold SCHD. So this is up 8.7%. So it's pretty much trouncing anything else that I have right now, apart from Meta and Google, really. So impressive run by SCHD this month. It makes me slightly regretful that I sold my SCHD that I did when my Roth IRA, if you saw the other video, but you got to think more long-term for that one. But yeah, XPAY is doing good as well, up 1.4%, like pretty much matching VU exactly. SPMO was down for a good chunk of the month, but has recovered a little bit, but still lagging the S&P, but up 0.48%. QQQM is up 1.2%. So that's kind of like my proxy for the NASDAQ, right? NVDY has been doing good on its own, 3.7%. And to note too, this includes all the total returns too, right? So dividends included. You can kind of see that here. WPAY is kind of lagging behind as I mentioned. ULTY here, you can kind of see that it's actually positive in total returns year to date. So that's why I'm still kind of contributing to ULTY at a smaller proportion, and I will for ULTY, WPAY, and YMAX. But yeah, this has actually been doing good. I think I've been kind of impressed by its strategy shift and how it's been holding up so far year to date since their November change. YMAX has been lagging a bit, 2% down. BTCI, obviously, big drop last week, down 3.5%. Microsoft had a big 10% drop last week and recovered a little bit, but like, yeah, still down 4.3%. Apple and Microsoft have been having a rough start of the year in the S&P as far as the Magnificent Seven. Costco's been up 9%, so that's why I was like, I got out of the red for a bit, but it's kind of come down a bit. Hood and Take Two, the two ones here that are almost both 10% in the red, and this is a big reason I invested in both Hood and Take Two last week or yesterday for my full paycheck investing. So kind of see there. MSTY, as I said, kind of recovered a little bit, but has come down due to the Bitcoin crash. Who's doing good as well, 1.4%. TDAQ and QQQI holding up. Not quite matching QQQM here, as we'll notice, but keeping an eye on it. And QQQI is matching it a bit better here, just down 0.1%. And GOW having basically leverage exposure to Google, right? So that's my little YouTube earnings position. And Reddit's just been down a lot, but had a crazy run up last year, so it's bound to come down. And gold just kind of keeping its march up, which is crazy. Definitely a bit of a crash in gold last week too, and especially silver down 30% on Friday, which is crazy on the new Fed news. So that's the heat map. Just good to get a bird's eye view of the portfolio and kind of see how maybe I reposition things or whatnot. But yeah, love this view. And as I mentioned, I'm gonna keep showing it now because it's one of my favorites. If we check quickly from like just a week, if we wanted to, for example, I can kind of filter it. I'm just gonna see how the week did, right? But yeah, I'm not gonna go over all of them again because we just did the year to date one. And as far as dividends, let's take a look here at dividend calendar. So on this month, this might not be quite accurate. I just want to double check here. Yeah, so it's like $5 off, but doesn't matter here. $5. But yeah, made $4,540 or 35 cents between all my dividends received. A good month. Definitely has come down from like previous months. If we look at like the dividend page here, kind of see my dividends received in past months. So I was at 5.5K in December and this has come down to 4.5K this month. So you can kind of see all the dividends there that have come through. I'm going to list them all. You can kind of freeze frame it here if you want. But yeah, can kind of see big dividend growth compared to last year where I was at though. So that's good. We're going to see this over the year, how it holds up. And yeah, and then the thing that's always good to look at too is yield on cost, right? So given that like, yeah, things like ULTY that are definitely in the red, right, in total return, and I have like a high average cost per share, that basically the yield on cost comes down, right? So really the last dividend was 72.55%, but my yield on cost is basically 50.18% for my average cost per share, essentially. Yeah, so MSTY, like any dividends that come in, they're at 71.36%, but like, yeah, with what I have invested right now and how much stuff has gone down, my yield on cost is 15.46%. So looking pretty rough for MSTY. And this stuff is what makes me maybe pause and I'm like, maybe I reinvest MSTY or just hold on and just kind of see how it does if MSTR has a bounce back with the next crypto run. So yeah, we'll see. Still thinking on it. And yeah, YMAX, its last dividend yield was 46.21%, but my yield on cost with everything is 32.57%. WPAY's last one was 42.74%. My yield on cost is 32.08%. And NVDY here, the yield for the last one was 38.3, but my yield on cost is 26.29. And NVDY, a good one to potentially swap that to if I ever did is maybe Chippy, since if I want to keep playing into the semiconductor space, really, right? And UOW is doing good, 31.98%, but yield on cost is actually higher because, yeah, it's actually positive, so 35.28%. BTCI, its last one was 30.16%. I'm at 22.56. XPAY was at 19.47, and I have a higher yield on cost at 19.94. TDAQ relatively close to the same. QQQI relatively close to the same since they still grow too and pay out a decent dividend. My gold one is above too because NAV is still growing, and yeah, SCHD. So yeah, good to keep that all in mind and kind of see where I'm at. It's estimating me to be at 53,771 annually right now, and yeah, this will keep growing as I keep investing every 2 weeks. Just hoping to grow this a lot steadier this year and have like less bigger setbacks from some of these bigger swingers, ULTY, YMAX, and WPAY and stuff. So that's why I'm building up TDAQ, QQQI, and XPAY a lot more. But yeah, that's basically all the numbers as far as the performance and everything. One last thing that I wanted to do as far as the investment sheet is go over, just the top line numbers and how they've been evolving ever since I started the strategy back in the end of May 2025, right? So you can kind of really see here. So I had the table for the longest time. So shout out to Velocity Portfolio. He started doing some graphs and thought that was a great idea. So taking that idea for sure, because it's just always nice to kind of see these numbers visually instead of reading them out. But as far as from where I was in December to where I am now. So good gains on the gross value here, as you can kind of see. Net value has gone up a little bit despite like some of the drops. Margin equity staying steady, has dipped a little bit here. Available for withdrawal has stayed steady. And the reason for that is that when I bought the dip for the Trump tariff threats that happened a couple weeks ago, so I actually used some dividends received so far year to date. So that's why my margin actually ticked on a little bit higher this month. So went from 146,236 to 154,427. So normally it kind of ticks up to like roughly at like a $4,000-ish mark when you minus out basically my expenses and dividends received, right? But so a little bit more given that I invested $2,700 and during that dip week. Then margin buying power staying steady as well. Margin buffer for the full portfolio staying relatively steady as well. Just dipped down a little less than 1%. Margin buffer net staying steady as well. And margin buffer, slightly going up. So I just want to keep this number going up, right? And my dividend received going down, as I mentioned. So you can kind of see the charts for that essentially, right? So you want to see this gross value kind of continually growing. So that's what's nice, right? Because this gross value is just going to keep growing because I'm never actually selling anything or taking anything out of the portfolio from the gross value of the portfolio, right? I'm kind of taking stuff on margin here. So that's why like these are pretty close together. Hopefully as time goes on, like this will keep growing And then eventually, once I do reach higher monthly dividend than my monthly expenses, then I can kind of start paying down this margin value. So eventually this can kind of start coming down. But yeah, good to kind of see it all visualized here. I have like my margin equity and how that's all evolving. My monthly dividends definitely trending up. It's definitely uneven for sure, given like how the payments shift from month to month, but you can kind of see that there. So yeah, last thing that I want to check here is projections. So yeah, again, this is my projection sheet just to kind of get a very rough idea of where I might land, right? And like how long stuff would take to kind of get to my different milestones. So I have them outlined here. So my extra net paycheck covered would be roughly 5,400. Monthly expenses covered would be $9,180. Net monthly salary covered would be $10,800. Gross monthly salary would be $14,916. Margin paid off, obviously, well, that'd be zero. And if I'm going to be comfortable like retiring early on this, I'd actually want my gross monthly salary to be covered by the dividends. So $29,832. So a bit of an aggressive goal, but like, yeah, just so there's buffer there. And then like I have a lot to reinvest if I'm not working anymore, right? So, and to keep stuff steady. So I haven't updated these yet, so just keep these numbers in mind here. But like, so you can kind of see that stuff got delayed a little bit. Was planning to be there this month, but not. So pushing this to closer to April 2026, hopefully. Monthly expenses covered, so that'd be more like 9,180. So this would be kind of closer to October 2027. Net monthly salary covered, 10,800. So that'd be more here, May 2028. So things are getting slightly delayed just because like, yeah, the yield has come down quite a bit, like I mentioned, and the dividends as well. So that's all kind of getting factored in, right? And gross monthly paycheck, this was like 14,916, kind of call it here. So December 2029, potentially. Margin paid off. So I'm basically looking for the $0 here. So this would be potentially in December 2031, maybe. And 2x gross monthly salary. This would be all the way at the end here, so 45. So things are getting quite a bit delayed. Can kind of see here, right? So this is kind of why I like doing this, just to kind of get a rough idea. So this kind of tells me that I need to maybe readjust the strategy a little bit and kind of see how I can kind of keep stacking the monthly dividends potentially higher, or maybe do a strategy shift potentially when I was kind of doing those projections the other month as far as like how I reinvested dividends, right? Maybe into growth or into other high yield stuff. But yeah, that's where it's tracking. If we check it against the raw projections that I had when I first started, you can kind of see where I'm at. So definitely behind, as you kind of see there, right? Yeah, so was aiming to be at 315,000 and 310. Was aiming to be at 176, at 156. Margins trending higher as well too. Monthly dividends higher too. So you can see how off stuff was, right? And based on market realities, that stuff comes into view. But I still love having these projections just to know where I'm going roughly, just to throw a dart from very, very, very far, right? Now everything will kind of start projecting from this point, right? So if I had not updated it before, you would have seen that actually I wasn't too off from the projections here. I think this was projecting to be at 308,000 and actually beat it. That was a 310. So that's the projections there. And then as far as portfolio updates, yeah, honestly, nothing too major, and I kind of like talked about them a little bit. No major news this week apart from like the Bitcoin kind of dropping like crazy, like I mentioned. But yeah, still kind of mulling over that rebalancing. So whether I potentially swap NVDY out for something like Chippy, or just put into the other fund of funds that I have, or just getting rid of MSTY as well too, and putting maybe into another Bitcoin fund separately, maybe just BTCI. So still debating all that. Honestly, I'm still mulling over if I actually want to realize these losses. Ideally, I'd want to offset some of these with some gains. So we'll see. I think like really once I see my tax situation in March, I might maybe make more of a decision there. And to see how stuff is working out on that side. And if I actually kind of did away with a lot of my carryover loss that I've had from previous years. So maybe I can kind of re-up that potentially. So we'll see. And then, yeah, on the growth side of things, still kind of debating Apple and Microsoft, still thinking of potentially reselling out of them and just putting that back into VGT, right? And just have a pure tech play there as far as ETFs, and then just have a more built up anchor. And then, yeah, just have a smaller pool of single stocks to deal with potentially. So we'll see. Still thinking about that. And then as far as this week's finance video of the week, so this one video from Income Architect Brad with Howard Chan, great little interview where he gives a good update across a lot of their bigger funds for Curve, right? He's the CEO for Curve. And yeah, I haven't invested in Curve yet, but I've been kind of keeping my eye on some of their funds. KQQQ, KYLD, KGLD. I've been researching them, watching a lot of his interviews with Howard. So it's been impressive to see how consistent he's been with like specifically KYLD. When I was looking at distributions the other day, like yeah, so 45.24% distribution here. But look at how consistent these dividends have been since it launched in November, which is impressive. And so it's been good to see how KYLD has been consistent, despite its like high IV names that it's kind of targeting for income. And then also how well KQQQ and KGLD have performed against other similar funds like I or IAUI and whatnot. So it seems like they have solid strategies backing them. And I do like how he's mentioned in other interviews as well, too, how yeah, they do bank some of that income sometimes and are very tactical with how much they distribute based on how the fund's doing that particular week or that particular month, right? So yeah, you can kind of see with how their payments are too. They're very nice round numbers, right? And even KQQQ, we can kind of really see very round numbers again, apart from that first one. The amounts vary for KQQQ just because like they bank it, and then also like depending on how the NAV is doing that week too, they might maybe distribute less just to help preserve NAV, which is cool to see. So probably one that I'm keeping an eye out for to eventually invest in. So yeah, just as a little heads up there as a finance video of the week. But that's pretty much the video though. As usual, if you want to follow me off YouTube, there's a bunch of different ways to do that. There's Blossom Social. You can kind of see all my trades, all my posts with the videos, my Snowball Analytics portfolio, all the good stuff that I was going over with you. You can kind of see all this for yourself and peruse around. All this is not hidden. So you see all my real numbers. Love being an open book and sharing transparently with you all. And also, none of this is paywalled, right? So this is all for free. You can kind of see it all in the description below. There's all the links there. Patreon as well. This is just a backup in case there's more YouTube shenanigans. I upload all my videos on here, my full backlog. So just a safe place in case anything happens again. And of course, there's the Discord. So we're pushing over 250 members strong. Love chatting with people and like-minded investors in between videos. You get all my trade alerts here as well too. I give a little bit more detail. So this the one I probably keep the most up to date, given that, yeah, the Blossom one is kind of automatic in the background, but you get my full numbers there. And just some great information that always gets passed down from people like Brent, from Boxhound and stuff like that. So great to chat with people. And whether they're living out of their brokerage or not, like, yeah, I'm all for everyone using their own strategy and picking and choosing what they want and just learning from other investors. There's no end all be all strategy, and yeah, very against people that are very adamant about that, right? And just want to hear about their one strategy in their Discord. So very open to others. There's other YouTubers in here too. Other people post their videos, and happy for people to share and be exposed to lots of different strategies, right? So that's the video. If you got some value out of this and you want to keep following along, follow along for future portfolio updates, follow along for future full paycheck investing series. Give me a like and subscribe. Hit the bell notification to be notified about future videos. And I'll catch you in the next one. Peace.